Poor people are careful with their money because we don't have any. And the money we do have, it's valuable to us. Therefore, I believe us poor folk, have a better chance of beating the market. I'm tracking every cent. For the companies that I choose to invest in, I'm looking up news articles. I'm following the company's growth and management strategies to make sure they're on target. I look at their past performance and assess their future growth opportunities. Before the coronavirus, my stock portfolio was up over 238%. I'm rich! No, I'm not. Still poor. My problem is I need more money to invest. As a collective whole, the market increases on average annually at a little over 10%, which is extremely good, by the way, in comparison to what you'd earn letting your money sit around in a savings account. And the banks are investing that money, by the way. Your money is going to work for them. Author of The Simple Path to Wealth swears by Vanguard stock. I'll put a link to his book in the description box below. Rich people, on the other hand, have money to burn, money to spare, and money to hand over to their investment broker. Unless you're completely clueless about the stock market and unwilling to learn, or you're at a point in your life where you can afford to have an investment manager, don't do this. This is money wasted. They charge you money to manage your investment portfolio. And again, we po folk have none to waste. Plus, if I strike out, which I won't, and I'll tell you why in a second, I don't have anyone to blame but myself. Can you imagine giving your hard-earned money to someone else and having them tell you they lost it all? And you paid them to lose it? Oh yeah, you be ready to kick butt and take names. Heads will roll. And this is what frequently happens during a market crash. Everyone starts looking for someone to blame. There's lawsuits and litigation, people lose their jobs, and some even wound up in jail. If you're curious about the stock market and new to investing, you've come to the right place. The stock market is not some mystical thing. It's like logging into your bank account. Sort of. Here are some tips. The one time that I picked a bad stock was when I got some advice from the internet. Don't do this. Don't get stock tips from the internet. Invest in companies you know. There are certainly enough of them out there to choose from. And in addition to only investing in companies that you're familiar with, get yourself some stock market insurance. Set limit orders. I learned this from one of Robert Kiyosaki's books. I can't remember which one. Setting limit orders will help you protect your initial investment. Let me tell you how this works. Say I want to buy one Microsoft stock at its current market price. Done. I will immediately turn around and place a sell order on that same stock for about $15 less than what I paid for it. I am so cheap. If I lose more than $15, I know myself. I'm going to be mad. So now I can breathe easier if the stock market or Microsoft takes a turn for the worst. My order to sell will be triggered if the stock price hits at or below my limit. So the most I'll lose is $15. I think I can live with that. And this way I can set it and forget it. I don't have to keep checking the markets every second of every minute of every hour of every day of every week and of every year. Because that could be stressful. Now it's important to know when you set limit orders like this, they do expire in 60 days. But your investment account, at least mine, shout out to Ally.com, will send you a reminder email a few days before the order is due to expire. And all you have to do is log into your account to change or replace the order. This is really a terrific thing because it forces you to do some account maintenance. Say in 60 days, your one Microsoft stock grew in value and is now, say, worth $185. That's great. You can now set your limit order to the price that you actually paid for the stock, so that now you have everything to gain and nothing to lose. Never sell at a loss. Since I learned about this, I do this all the time now. Every 60 days or so, I go in and I adjust my sell orders higher to take advantage of the gains that my stocks have earned. Now, let me tell you how this has worked out for me amidst the coronavirus crisis of 2020. All of my stocks are gone, except for Microsoft. They're tough. Before the coronavirus affected the markets, I'd owned stocks in Visa, which I'd had for years, Tesla, which is near and dear to my heart, Eli Lilly, and Microsoft. Unbeknownst to me, the market was falling, and I found out from a phone call from my dad, as well as the email, that my precious Visa stock had sold. And the next day, Lilly sold. Then after that, I went on and sold Tesla because they're a pretty volatile stock. But I'll be getting them back. But fortunately, since I had those orders in place, I made a profit on my investments and did not lose money. Now, this method of investing goes against the great Warren Buffett's. He has been quoted as saying that his favorite time to hold a stock is forever. I tend to agree, but with reservation. I'll hold on to a stock forever too, for as long as I think it's going to make me some money, and as long as I don't need it for a serious emergency. Right now, my investment strategies align more closely with Kiyosaki's, which is to buy low and sell high. Makes dollars and cents to me. Now that the market is down, I'm kind of waiting for it to bottom out, and my plan is to jump back in soon. Market busts are the perfect time to buy. Rich people, foundations, and businesses love the stock market. If their money is sitting around gaining little to no interest, it's frustrating to them. So the market will go back up. It's just a matter of time. And you want to be on the right side of time. A stock tip from YouTube creator Jeremy over at Financial Education 2 is to keep cash on hand to take advantage of stock market dips. And I 100% agree. There have been times when I desperately wanted to buy into a company before an earnings report was released, or after learning that they'd invested in a new technology that I know will result on a great return on investment for them. But I wasn't able to because I was cash strapped. Now that I have this aggressive goal to pay my mortgage off by the time I'm 40, I'm seriously considering taking out a loan to invest in stocks. I'm not kidding. I'm good at picking stocks. And I just feel like I'm at such a disadvantage because I don't have enough money to play with. I feel like I'm leaving money on the table. It's so frustrating. Let me know in the comments below if you think that taking a loan out to invest in the stock market is a good idea or a bad idea. Is it too risky? I mean, we take out loans for consumer debt all the time. This would be an investment loan. Let me know what you think. Another personal goal is to get to the point where I can live off of the dividends and interests of my investments. And as I grow, I will pass along information and tips to help you grow as well. So make sure you're subscribed so you don't miss anything. If you've been sitting on your fingers about investing in stocks, now is as good a time as any to jump in.
Do it! Just do it!
As my coworker would say, quit poo-pooing around. And remember, the market will always go back up and it will always come down. So be prepared, buy low, sell high, and set your limits.